The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome all to another wonderful edition of the Power Trading Hour, this time live from the TFNN studios in downtown Clearwater. Another beautiful day, another Chamber of Commerce day down here. Of course, we've got a market that is moving. We've been talking about it for this week, and that is the advanced decline line is the story. And we are seeing some significant weakness in this market. It looked like they've been able to hold this market up maybe even 2, maybe even 3 weeks trying to get this IPO out. Some company I've heard a little bit about called Twitter. Anyway, you would have never known that it was going out and becoming public today. It just quietly went public. No one said a word. Wasn't a headline on the Drudge Report. Wasn't the news last night at the 6 o'clock news. No one was saying a thing about it. Just very, very quiet. Of course, a little bit different today. Anyway, when we look at the S&P, it's down 17.8 points. Yesterday, we pointed out the summation index was pretty much setting up identically as it was several months before, actually 6 months before last time the market took a header. And I think we started seeing a little bit of destabilization at 8:30 when the GDP numbers came out. And then, about 10 minutes later, a surprise cut in Europe. And, of course, if you'd listened to everybody, every talking head on CNBC, Bloomberg, and Fox Business News, it was just, there's no doubt about it. Europe was just going to the moon. There's just no stopping it. Europe is just fine. Everything I saw said just the opposite. I don't know how anybody could come up with that. Maybe it was wishful thinking. Maybe it was a big lie. I always think that a lot of those guys that come on from the big street names are told exactly what to lie about when they come on. Oh, everything's great. Everything's wonderful. Of course, that goes back even 100 years. I remember reading in Jesse Livermore's book about how a lot of the people on the street are wishful thinkers. So you don't know if they're just stupid or if they're lying. But it was very, very tough to say anything other than Germany was doing slightly better and the rest of Europe was doing horrible. And I think today's surprise rate cut is a shot across the bow. It, of course, threw a huge monkey wrench into the devaluing a dollar out here. When we look at the dollar index, up 26 cents at $80.62. Was it? No, $80.82. This thing really wanted to go take off, and I think everybody in the world has been trying to do everything to keep the dollar down and exports up in the United States. Probably what you don't want now is to be owning a lot of stocks that export a lot of things from the United States. And, of course, we had a short little bounce out here this morning and then sell. So we will keep an eye on it. Most important, of course, is a volume. And we're lucky to come on a lot of times at the beginning of the show with a 2.2 billion shares, already 2.6 billion shares as we start the day, and down 18 points on the S&P cash. This thing had a lot of hang time. If you're into basketball jargon, we had a lot of hang time up at 1770 area, and that we're coming off now, and already with some decent volume has probably been a big indicator. None so big as, of course, that summation index really giving us a heads up that there were fewer and fewer stocks pushing to these highs. And, of course, yesterday, I forgot who in the den was bringing it up, but they had the Dow at an all-time high. We're seeing big tick moves in the market time, or in the markets today. In fact, someone just posted not too long ago. Polar long-time management. Fact line. Okay. Just seeing back here. Oh, Angie in the Den was posting that we had a negative 1100 tick, and just a very ugly advanced decline line. I think we're on the right shoulder of that summation index I showed yesterday, and probably a pretty good indication. We have in the newsletter, I was short a couple of sectors this morning, and looks like we're going to be on the right side of those moves now. But we're going to talk about several stocks. One sector I am short is solar, and one of the reasons why is First Solar out here. They had a nice high out here on May 21st, $59 with 14 million shares. Last couple of days, this stock had been trying to push these highs with a lighter volume. What do we have? 10 million shares up against 14 million shares on the 4th. When we get to the 5th, 6 million shares. Yesterday we had 5 million shares. But kind of hard to not see that these stocks, the most bloated of these stocks, were probably in the energy sector. Of course, when we look, and of course after this show today, we're going to have what are we going to? Oh, we're going to have Andy Heck, and he had a really great call on energy coming down. Well, what happens when energy comes down? Alternative energy stocks are probably the worst hit. When there isn't a great disparity between the price of fossil fuels and solar, solar starts getting really, really expensive. So as we see crude in that market coming down, we see a lot more around the world nuclear energy coming online, probably going to hurt solar. One of the other things is all these companies, including First Solar, truly lose money. The only way that they're still in business is huge government subsidies. If you're in a business and the only reason you're in business is because the government is giving you money, and that money has a good chance of eventually going away, as this does with the sequester, which is really going to put a crimp in the coming years on any of these alternative energy stocks, which were basically bag men. They got huge loans. They were able to take a great percentage of money, IPO money, and other monies that the governments gave them, and regurgitate it back into their mouth like the mother bird to the little baby bird. Well, here's a little taste. Here's 200 million. You gave me $1 billion. Here's 200 million. Blah! And that's what they did. Of course, the politicians loved it. The people who were in these companies and these solar companies love it. Almost all of them have gone bankrupt. I don't think that there's anything different when your product costs 40% more than the product X, and they both do the same thing, and you don't have to finance it for 10 years. You can pay as you go with product X that's 40% less, or you can set up a loan that takes 10 years. It just doesn't make sense. Eventually, they will have a great product that costs less than burning coal or burning nuclear energy, but at the absolute best estimates for solar right now, per kilowatt hour, is it's at least 40% more expensive. And by the time you put in the amount of interest over the 10 years to pay for all the upfront costs, it's more like 300% more expensive. So very, very tough to actually justify solar yet. I would have much, if I was king for a day, that's what I'll be. I'll be king for a day. Instead of politicians throwing all this money at solar companies, I would have taken it and given it to some of the branches of government that do very well at coming up with new technology. And that technology would have been, when they were done with it, competitive, at least with current prices, and that would have made a difference. But just shoving money at companies and hoping that the price will come down, if you sell enough of them, the price will get down. Just horrible business acumen. And, of course, what we can expect from the government. There's something else I'm so mad about I could spit nails about the government. We'll talk about that, I think, in the next segment. Anyway, looking at First Solar, all these solar stocks behaving badly today. Next one is SCTY. This one, just same kind of thing, a little bit in closer time frames out here. Solar City came and tested. Not as bad as these others, but it came up, could not hold its high back into the trading range also. But all these companies are pretty much based on government subsidies. Those subsidies with the sequester, which is really going to kick in the first of the year, are really going to have a tough time next year. And that's the dirty little secret that they have. Let's see. Okay. Now, other things that we're talking about today. Other than that, WFM, Whole Foods. Kind of a very interesting move for Whole Foods out here. I mean, I'm trying to remember the last time a stock in the supermarket category traded like a tech stock. But this thing came down on massive volume. Just what, a week ago, this thing was up at the highs at $65.59. Got down to $57.57 today, which is right back into where we're going to probably see support that came in from September 18th all the way through October 9th. But this is really going to give you some idea just how lofty and how frothy the markets are. Probably a good sign that we see something like Twitter come out today at a PE of infinitum, because we're going to have probably that's what we're going to have. If you don't make any money, how can you have a PE? How can you have a PE if you don't make any money? Well, we're going to talk about that a little bit more and get into Tesla also, which it's just having another horrible day. But anyway, this probably the most interesting stock out here today is Whole Foods, and that is the way that it is trading off here, trading like a tech company for a company that delivers food to the local store that you go and buy. Maybe high-end food, it's food nonetheless. Traditionally, this kind of company these worked on something like 3 and 5% margins. They, by going after people with a lot of money to spend on food, were able to raise those margins. A good business to be in, except when they can't get the same source sales going up. This was a pretty high multiple for this kind of company. And like I said, trades like a tech stock today, down on massive volume. We'll be back in a minute. Give me a call, 877-927-6648, 877-927-6648.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And I guess we just had to go to the retarded music for some unknown reason here today. We could play good music, but no. We've got to go into the toilet and dig something out that's probably brown and smelly to play on my show. Well, we know the trials and tribulations I have at TFNN. Everything pretty good, except the music stylings by our engineers. I'm pretty sure they were dropped on their heads many times as a child. And yeah, don't put that bag over your head. No. Don't, no, young Al, please don't put that over your head there. You might suffocate, or just half suffocate and play bad disco music the rest of your life. Anyway, as we go into looking at more stocks, we're looking at Tesla. I've been warning about Tesla forever, and basically we've gotten to that point where we've had, you could almost say this thing has had 3 gaps down. I would have liked to have the first gap down on much bigger price range. So there may be one left in this one. In fact, I wouldn't think about getting in much lower, but it is, let's go back and, let's get just a little bit longer time frame here. See if I can get it. Something's going on here. Oh, that's a better one. We'll look at that. Anyway, it's got 2 decent ones. I'd really like to have seen 3 like that first gap down if you're looking at 3 gap plays. So probably not going to do that. But we probably could have, I'm counting this first gap off of 181 down to the 6th of yesterday, actually, as the first gap. So you probably have one more gap down set up in this. Now, fundamentally, I can't imagine anybody believing that this company priced at selling 350,000 cars a year basically the model believed that they wouldn't have to build any more plants, they wouldn't have to do anything else, that everything they had was all set up, just order more parts and you could build 350,000 cars. They bought a old plant, they got started on the cheap. But that doesn't work after this. So what really made them blow apart 2 nights ago, they got into discussions about building a plant to build their own batteries. That plant was going to be extremely expensive because the EPA in the United States. They were going to have to go through all hoops, build all kinds of stuff. Certainly a lot cheaper to build overseas, but they wanted to build here in the United States. But when they started talking about how much it was going to cost to build new plants to build the new batteries, and the fact that they are pretty much right now restrained from delivering any more cars into the near future without building a new automobile manufacturing plant, this thing took a huge nosedive. I could have told you that already. Anybody that's had any basic sense knows that you just don't open yet another store and the prices stay the same. They look like they were making monster margins, but anybody knows that that would have been fleeting in the auto industry. They have huge problems ahead of themselves, nonetheless, of spending all that money in the secondary they started pushing out in the 90s. So don't be surprised. I'm looking for this thing probably to bottom out here in the next week, probably around that 125 level. There's a nice little gap out there. This thing could go all the way to 104 when everybody figures out just how much money they're going to spend and how much it's going to cost to build these plants. They don't have near the money that they need. And not a bad company and not a bad product. What it is a pie-in-the-sky belief that they were somehow worth a 260 PE on the day that they were reported their earnings. But look at that. Anyway, I'm thinking maybe 125 down here. And if this thing would have a nice slow bounce back up to maybe 160, 165, maybe that would be a great place to pull the trigger on this thing. Short, of course, it's a huge short interest already on this stock, like many that we covered on Tuesday. And I don't think I'm wrong, so none of those are probably going to pay off. But always interested in looking at those. Again, you can give me a call at 877-927-6648, 877-927-6648. And, of course, what do we have here? As we get, okay, off 18.5 points, 2.7 billion shares on the consolidated New York Stock Exchange tape. We've got action in the markets finally after a boring 2 weeks. Be back in just a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Yeah, we're having a good time in the den today. Andy's warming up in the bullpen. But I said I was going to have to kill again if anybody said hashtag something. I just said it. Does that mean I have to kill myself? Anyway, there was kind of a couple of questions in the den, and I will bring it up now. And actually, they were in last night and today. But the question is whether or not these guys can actually start selling the quote-quote insiders. There is the standard 6-month lockup period for the T company. It is a TW and something. I'm not going to say the full word. But there is a lockup period. Those guys are locked up. They were supposed to have a meeting that was supposed to be over at 5:30 last night for the pricing at $27. For those that have never been through an IPO, God bless you, because it almost cost me my life. It is a horrible experience to be on the inside. As soon as it's done, you're rich and you're happy. But for the most part, it is somewhat problematic. There is a negotiation that goes on between what are known as the underwriters. These are big street names like Merrill Lynch and Goldman Sachs, a lot of other names that you normally don't hear a lot about. And that negotiation goes something like this. I'll take 10 million shares at 25, and someone else says, I'll take 10 million shares at 25, but I'll give you a 6-month lockup, or a 1-year lockup, and I am not going to sell before that lockup period. And they'll get enough people together, and the idea is the exact same as the problem when 2 criminals go in, but the police don't have enough information to convict either one of the 2. They try to get one to roll on the other. And the end of it is either you stand together or you hang separately. And that's exactly what these guys get into, is a negotiation on how long these guys can hold the stock up there. Because they know if they could hold this stock up, let's say 45 or 50 bucks for a year, that then they really can get into the business that they're in, and that is distributing that stock to slubs like us. Slubs like us. Probably make a good movie name. Anyway, so when we're looking at this whole negotiation and whether these guys are getting in or out, one thing that was interesting in the news was that they all had a fairly decent agreement written and enforceable about selling the stock early. And my understanding is that they're going to keep it for a year. They got rid of three or four underwriters who would not sign on to that, and that's why the price dropped from 27 bucks to 26 bucks. So what you have is probably a stock that is going to, since there's only like 15% of the shares anyway outstanding tradable, there's still 85% of the shares out there that aren't. What was it? Somewhere around $18 billion for a total market cap for the company. So you've got a very few amount of shares. That's why it doubled today. They're going to try to keep that up for a while. Those guys that are in this stock paid, what, 27 bucks, 26 bucks for it? They'll sit on this thing, and they know if they sit on it, and they can hold it up around 45 or 50 bucks. They got an easy 100% profit. All they have to do is not sell. We already know that they didn't give any of these shares out to slubs like us, and they're putting a few shares into the pool to start a market on the thing. But for the most part, there's going to be very few amount of shares available. There's only, 15% of the total float. Maybe it's 18%. I didn't see the final numbers. But that's what they were talking about last night. So don't get too excited about this thing. I don't expect it's going to have a lot of volatility. My belief is that they're going to want to make sure that this company trades fairly normally and benignly for a year so that they can push it out and get their 100% profit just if it closes where it is today. So not a whole lot of push out here. LinkedIn, someone just popped that up, LNKD. We talked a little bit about this stock. It's been on its way down. Certainly it's going up against a previous low, and it looks like it may close lower out here today. October 9th, it had 213.50, 4.4 million shares, 2.6 million shares today. So maybe it still has the opportunity to blow through that low. But it is going up against a gap with 7.5 million shares. I suspect there are several stocks that are going to do well in this pullback. And I think there are a lot weaker stocks than LinkedIn, stocks like Tesla, stocks like the solar companies that are going to get blown apart and eviscerated and beaten like a red-headed stepchild and hit over the head with a club like a baby seal. I'm going to mix some more metaphors before the show's over today. And we're going to get awards for that too, not just digressing, but mixing metaphors. We'll get a bunch of stuff going on this show. Anyway, you can give me a call at 877-927-6648. Other companies of interest, I almost shorted this company, did not pull the trigger on it. And this was a Kramer pump of the last couple of days. Anybody that bought it on his call, he got this thing to pop up and have a nice gap into news. REGN is at Regeneron Pharmaceuticals. That was on the 5th. Went a little higher than on the open yesterday. Started selling off yet again today. But they've got a little bit of news. You can look it up. I just looked at this one fairly closely. But what a nice move. He popped this thing up, got everybody in it at 300 bucks, and it's much closer to 270 now. Oh, these guys are taunting me in the den with their hashtag talk. Ugh. Almost as bad as disco. Almost as bad as disco. Qualcomm came out with news after the bell, doing a little worse. And there is a couple things going on out here in Qualcomm. One is, especially I got enlightened about it last week, Bloomberg had been doing a long-form interview on the CEO of Baidu. And there was some comments back from the CEO at Google. He said that they never had a chance in China, that the whole thing was rigged, that they would find all kinds of things, ways to screw them out of money. They finally gave up and left. He basically said the same thing with other people trying to come in, and his comment was more about how well Apple would ever do in China. He says the game is rigged there. You're never going to get in. They'll always screw you over one more time, and you'll find out that all your efforts eventually go south. And kind of interesting. But anyway, Qualcomm was counting, I suspect, on a lot of sales of a specialty chip that they made for Apple. This chip will work on every kind of network in the world, including the weirdo network that China has, that the biggest carrier there promotes. So they built a specific chip. Now, I think what they were, most of their forecasts and the question about whether or not they're going to make decent money came in the earnings call last night. They were basically saying that they're going to see that next year is extremely loaded to the last quarter, a lot more than years before. And, of course, no one wanted to hear that, and, of course, started selling off fairly quickly on those comments. When they got into the conference call, more of the same. This thing's down fairly strongly, headed to its previous low at 65.47, and maybe even lower. Not only does Qualcomm have problems with building this fairly decent chip that's probably not going to go very far, because, of course, the only reason to have it is if Apple gets a big contract and can start actually selling into China. That doesn't look very good, at least if you believe the Google folks that say that they just as soon stay out of China, that it's a rigged game. But not only that, but they've got a major top 5 technology company here in the United States building similar chips to go up against them this year. Those chips will use less power. And we're going to start seeing those chips probably in the first to middle of the second quarter. 877-927-6648 as a call. Anyway, Qualcomm. Also, Click out with news. Always interesting to see Click. Click and Clack, always one of the companies that you want to get to when you're looking at the semiconductor space. They make a lot of the technology that allows chips to be connected to regular connectors that can then go into motherboards and that kind of stuff. But there's a great amount of technology at the quantum level. They call them buckyballs and some other stuff like that. Think of it as the super glue that allows you to attach metal leads to the printed circuits that come out of a fabrication house. So when you look at Click, you always want to look at Clack. But these are a great canary in the coal mine stocks that tell you exactly what the semiconductor space is doing. If these guys aren't selling stuff to them, they aren't building things. And I suspect, with the exception of a few companies building stuff for tablets and smartphones, the business has slowed down quite a bit, and Click and Clack are talking about both these things. Click right now, but of course down. This thing gapped up and gapped right back down the same gap. That gap was on the 14th of October with 3.5 million shares. We've got 2.8 million shares already. I'm pretty sure we're going to go through that again. So when you take a longer look back out at Click and Clack, these things probably headed back down into the $10 range. Let's take a quick look at Clack. A higher dollar stock. This one's pulling back a little bit, not as weak as the other one. Certainly more on the cutting edge of, massive island top in Click. So when we're looking at KLA 10 core, they've been able to get more of that business over the years. much higher priced stock. This thing hasn't given us the same kind of signal, but I would be watching over the next few days to see. I think that they have earnings, and just so many of these companies are hanging out. Yeah, they've got earnings the 24th, but I think that they already went through the tail end of the earnings cycle where they were doing okay. But no earnings real clue. It just seems like these companies wait for earnings to get blown apart. Also of interest out here today is JCPenney, one of the few stocks that was up today. We'll see if we can get a quote on it here. Yep. Okay, there we go. Yeah, are we up there? No. Hang on a second. There we go. And on JCPenney, actually up a few pennies out here today. A lot of people are making a lot of hay that their same-store sales were up 0.9%, less than 1%. Now, what really has people in the malls absolutely scared to death if they sell clothes is JCPenney going out and blowing out all their inventory through the end of this year. And that is the thought of what is going to happen at JCPenney. That they're going to come out with really strong sales, not sales numbers, but sales on clothes that give them very, very low profit margin. So even though they finally, in the first time in like 2 years, were absolutely able to say we had slightly better sales, first time in a couple of years, they get almost just a tiny pop out here. Of course, the market's not helping them at all. But the belief is that not only will JCPenney take down the profits in a lot of these tween clothiers, like American Eagle and Aerospecial and all the other ones, but they could take down a great deal of the malls with them. These are the anchor stores in these malls, and a lot of the REITs have been very nervous. You can see them trading down over the last 4 weeks. The thought is that JCPenney is going to blow out as much stuff as they can, go out of business, and leave a lot of these malls without an anchor. A lot of the stores or malls that JCPenney is in are older malls too, and losing somebody like JCPenney could be the end of it. You might not go to a mall if half the stores are closed there. And once that kind of rot comes into it, becomes a very, very troublesome on whether or not you can get the mojo back at those malls. SMH. As long as we're talking about click and clack, let's take a look at the Semiconductor Holders Trust. This thing pretty much looks like it's given up the ghost out here. Let's put on an overlay. I'm going to call this pretty much over for the double repo pattern. This thing is confirming a giant sell signal with a volume today. You can either go the 9-day moving average or the 3x3 displaced moving average. But if you get something where you get, especially in the ETF, if you get something where you get 10, 15 days up, and the thing goes sideways, closes a while above it, closes a few days below it, closes a few days above it, back down below it. Normally these things start really accelerating coming in today, and I think that's what we've got. But look at most of these being weaker. Give me a call, 877-927-6648.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Oh, no. It is not going to get me. The rhythm is not going to get me. Oh, boy. You have to say that people... I mean, there's such great music out there. Why do we have to wallow in the just the bile of poor music? Oh, anyway, I'm just glad I don't have a gun. I'd almost shoot myself. Only after shooting the engineer for playing that. But yes, what can we say? Anyway, we got just a few minutes. We've got Andy coming up after us. He's going to talk a lot about commodities. And probably talk about, maybe he'll talk a little bit about how solar power and crude coming down and energy prices coming down are going to affect alternative energy. But I suspect certainly not going to do it any good. In the 4 o'clock hour, we're doing the Tech Insider on a special night because we've got we got a phone call. I forgot. Bill from Springfield, how you doing?
Okay, David, doing all right. Can you hear me?
I can hear you great.
All right. I was wondering about gold. You were looking for it to go into the 1200 area.
Yep.
Even lower, and you still think it might.
I still think there's a wicked big blowout left in gold out here that you had a great trade off the bottom. I'd like to buy it for the next 2 or 3 years, and I think we're going to have that opportunity probably in the next 60 days. So,
next 60?
Yeah, I think we probably probably right after the first of the year. I think people are going to start seeing, we're going to probably find some kind of low, but I have a feeling the dollar's going to increase and gold's going to come back down for a while. And unless we have some kind of emergency rate cut, and it looks more like a taper after the GDP numbers this morning, looks like a taper earlier rather than later. I noticed the GDP numbers also for the forecast next year are going down. We've got big tax increases that'll hit us all in the first of the year. And I just think that we're probably going to see one more push down in gold before we find the bottom.
Okay, and nugget, is it basing in here, you think?
I think it is, but I think you got a good chance that this thing tests the 37.83 of October 15th out here. I would be very surprised that it does not test that before it heads higher. So I think, it's not a huge move out here, but I think you've got plenty of time. Sit back and wait. There's going to be a lot of yelling and screaming and gnashing of teeth, dogs living with cats, real wrath of God stuff, and then I think it'll be time to buy.
I see. But nugget won't bottom out before the first of the year, you don't think?
Good question. I think we're going to get a test, like I said, in the next 30 days, maybe 60 days, and that's going to tell us a lot. So I would just hold your powder dry until you get a test of the 37.83 and then make your decision. Maybe call me back when that happens. Maybe it happens tomorrow, but I'm not going to hold my breath and tell them to ask for Blue Boy. I'm just going to wait and just say when it hits 37.83, what is the volume? How does it come in there? What are the characteristics like? What is the dollar doing? What is everything else happening? I think you can probably watch a pot of water until it boils. They say it never does, and I think if you just watch on it too hard, it will. I'm just setting alerts for that 37.83.
Okay, all right. Okay, but on trading nugget today, we're probably near the bottom on support.
Yeah. I mean, I could see people taking a shot here. I just wouldn't until 37.83.
All right, sir.
Thank you. We're going to break. I'll be in the 4 o'clock hour with the Tom O'Brien. We'll be talking technology tonight. I've got a lot of stuff I think you're going to want to learn. So anyway, aren't we at the end here? Oh, there's the music. Finally. Okay. I appreciate it. See you tomorrow. Same bat channel, same bat time.
Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book, Introducing the Chapman Wave Methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.